Hey traders, welcome back to the next episode. Today we're going to be talking about the MACD indicator, or the Big Mac, like some people like to call it, and we're going to look at how we can actually use it to kind of gauge whether or not we should be in a trade or not. Now, before we get into this, first of all, I want to give out the disclaimer. Right, I'm not your financial advisor, nor am I trying to be your financial advisor. The information that I'm showing you today is solely for educational and entertainment purposes. All right, great. Now that we got that out of the way, let's get into it. So, if you look right here, I am on a monthly chart of the US Canadian dollar. And the reason why I kind of chose this pair is just because right now it's kind of like just kind of mulling along a little bit and just doesn't really seem like it got too much of direction. Almost like it's in consolidation mode almost if you look right here, right? Once again, this is the monthly chart. You see where let's see. You see what the direction of the trend was going down. It came up and then it went back down again, right? And then you see from here, which is what looks like 2011 in July. It's been slowly kind of making its way up, and then really kind of started getting into consolidation 2016, and then it dropped a little bit back in 2017. And this is where we're at today. Now, just looking at the naked eye, you say, ain't much there, right? But when you bring in the MACD, right, and the reason why I love this indicator so much is because it really kind of gives you a sense where the market is at. And what I mean by that is whether you're in a bull market territory or whether you're still kind of in a bear market territory. Now, is it perfect? Absolutely not, because it's based off of it's based off of moving averages. So of course there's going to be some lag time there, but is it overall, can it help you, kind of get a sense, just looking at it at a glance where the market is at? In my opinion, absolutely. So if you look here, after this market downturn, and as we start to turn back up in 2011, it looks like the market's kind of consolidating, right? And I mean, you could get in and you could make some moves, but it's nothing where it's going to, blow your socks off and just be like, wow, I made a ton of money this month. But if you look and you notice where the MACD crosses over the zero line, right? Now all of a sudden, that's when you start getting movement to the upside, right? Because the way that this indicator works is that once the signal line and the MACD crosses over the zero line, that lets you know that you're in a buy zone, right? The market is going up. It's bullish territory, right? Because it's been moving up for a while. Once it crosses below that, as you see here, usually that indicates that you're in a sell zone, right? The bears taking over, and there's a lot of bearish momentum, and just look for opportunities to sell. And if we just kind of look here, this is what's that? Around March 2016, right? It's taking a downturn, right? This is the this little teal, I mean not teal, but little orange, light orange line right here is the signal line, and this blue line is the actual MACD line. As you notice that they crossed over, and usually what happens when it crosses over is letting you know that look for price to start going down, right? Even though we're above the zero line, we're going to be looking for price to go down, and typically in this situation right here, you would look for it to be, I guess, almost like a pullback, right? When the market's taking a breather, and as long as it's above the zero line, then the expectation would be you can look to come back in here and buy at some point, right? And as you can see, we haven't quite broken the zero line yet. I mean, it's headed down towards it, and expectations would be possibly that these things are going to cross back up again, and this market is going to take back up, start back continuing where it left off on the up move. Is it a guarantee that that's going to happen? Absolutely not. Is it a possibility that it happen? Definitely. Now, if we look over here on the weekly charts, it's a little bit different because on the weekly charts, we're actually below the zero line, right? But we headed back up. And then we look on the daily chart, we're actually back above the zero line, headed back up. So you said, well, how do we trade this? Well, it depends on what time frame you trade on, right? I mean, if I'm looking over here on the monthly chart, and I'm seeing that it's still above the zero line. I'm looking at the weekly chart, I'm seeing it's below the zero line. And then I'm looking at the daily chart, and I'm seeing that it's above the zero line. Personally, I don't trade off the weekly charts. I mean, I do use those for directions, and I use the monthly charts for directions. But I'd be more interested to see what's the trajectory of the long-term price trend, and then also kind of zone in and figure out, well, what's the direction of the time period that I'm going to be looking to trade. And I'd be looking to trade in on the day period, and probably try to find my entry here somewhere on the hourly chart. And as you can see, all those look really good. The other thing you will notice about this indicator is that not only do you have the two lines that you can look at and see where they are relative to the zero line, you also have this histogram here, right? Which is a really good indicator because it's kind of a early warning, early eyes type indicator that lets you see what price is doing even before you see it in the MACD, or I mean the MACD line or the signal line, right? Because if you notice here, it looks like the momentum had waned off, and now it's going back up, right? So buyer's momentum to sell was increasing, and then we hit an inflection point where all of a sudden, all right, it's not that many sellers in the market anymore. People are going to start back buying again, and now look for the market to go back up. Now, if you look at this in relations to where you're at on the chart, let me change this cursor here. All right, so if you look at it where you are in relation to where you're at on the chart, you kind of see, right? Market sold off here. You can see the histogram here. As it start below the 0 point, and as the market falls down, so does the histogram. It continues to grow on the downward side, and then as the market starts to get a little bit, stronger, buyers start trying to come back in, but the market's still going down. You see the histogram actually contracting and starting to go back up towards the 0 line, and then eventually it breaks the 0 line, right? Or it becomes even with the 0 line, and then it breaks back over as the market goes back up, right? Now, whenever you use the MACD or the histogram, this is going to give you an idea of where we're at in the market. It's not necessarily you need to buy whenever these lines cross, or you need to buy when this line, when you see the histogram starts to contract from the downside and start to expand towards the upside. What you need to do is you just need to be aware that this is happening, right? There's other things that you need to look at and consider before you start putting money into this currency pair, okay? Because what I hate to see happen to you would be that you get in here just based off of this one indicator, then all of a sudden you get whipped around and the market turns a different direction, and then you lose all your money. Okay, these right here is one of those real-time indicators that is as the currency pair is moving, and so today it could look like this, right? Oops. It could look like this, and then by this afternoon it could be down here, right? So you really have to be careful, because once again, this is a lagging indicator, right? It's not projecting to you what the market is going to do, this afternoon or tomorrow or whatever. It's just telling you what's happened over X amount of periods, and based off of that, you're kind of coming in and making your decision based off of what you anticipate the momentum to be in the market going forward. That's all. Looking at momentum. It's like if you get a car and you're trying to push it uphill, the momentum is against you, right? But you take that same car and all of a sudden you're trying to push it downhill, the momentum is with you. So it's a lot easier, right? And that's what we want to make trading. We want to make trading a lot easier for us to trade. And so we want to trade with the momentum. And this indicator is a really great indicator to help us do that. Okay. So anyway, hope you enjoyed this little chat about the MACD indicator. I don't want to make it too long. I just want to kind of come in and touch bases with you and tell you a little bit about it and why I love it. And if you got any questions, please feel free to leave a comment or, go to our website, check us out, or even take advantage of the free trading download that we're offering right now at the moment. So at any rate, hope you enjoyed it. Talk to you soon. Happy trading.